What's going on, everybody? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today's video, I've got a ton of news in macro markets, real estate markets, global economies, and crypto, because I believe that too many crypto enthusiasts, too many crypto YouTubers, influencers have been looking at crypto in a vacuum. So I want to go all encompassing, show you why I believe things are going to go in a certain direction and how I came to that conclusion. So that being said, guys, stick around. There's a lot to go over. All right, everybody, we know the drill. I'm not a financial advisor. This is not financial advice. I simply share this technical analysis. You use it as you see fit. But remember, you manage your own money. You manage your own risk. With that being said, if you like this video, hit the like button, subscribe to the channel, all that good stuff. We're going to hop into a couple of different things. And I'm going to be just upfront and honest with you guys to start. Shorting right now is the only safe play in this market for crypto. You have to find short positions. There's not going to be a safe long position. There really isn't anything yet that could be a safe long, not for a while, I don't think. But first thing I want to show you guys is something I find very interesting, because this on a weekly chart, this is the Russian ruble against the US dollar. And it's getting into the geopolitical, the economics of the global economics. And I don't consider myself to be a global economist or anything along those lines. I know just enough to kind of be dangerous. But the Russian ruble is at a 7-year high against the US dollar. This mark, actually, it's like currently sitting right here. It hasn't been this high since June of 2015. And you see where the sanctions kind of tanked it down. And the Russian economy is actually picking up much stronger than I think anybody anticipated. And I think the sanctions have done more damage to the US and the European markets than they have to Russia. And Russia and China are trading back and forth with each other, and they are settling without using the US dollar. They're settling in the Chinese yen, or I'm not sure exactly what it's called, but the Chinese currency. They're settling their oil sales without the US dollar, and more countries start to do that. The US starts to lose its world kind of world currency view, and it could be a problem. With that being said, here as well, with the Russian economy doing well, the sanctions will not, based on the economy for Russia, will not be enough to slow them down, to stop them from continuing their assault on Ukraine and what they're doing. I think that part of the sanctions was to cripple their economy, so they literally just couldn't afford to keep doing what they were doing. And that's not the case at all. They are selling a shit ton of oil. Their economy is still going. It's quite frightening, honestly. It is. I think there's going to be more pain in the future than we anticipated. So that's not really looking good for European economies and for the U.S. economies, their U.S. economy. And I think that the sanctions have done more harm than good. Another thing that is not looking good, especially for the U.S. economies, is the housing market. Mortgage rates are going crazy here in Maryland. Mortgage rates have gone from 2.75% like a year ago when I refinanced my house to now 6.5, 6.75%, somewhere in that range. So almost 3x. And if you're not aware, every 1% of interest rate higher, you lose about 10% of your purchasing power. So someone who could have afforded a $300,000 house a year ago at 2.75 have essentially lost about $90,000 of purchasing power. They're down to about 210, and there aren't really many houses available in the area at that price. So it's a real conundrum with the mortgage rates. Home builders are expecting such low sales for the next quarters. And I'll put this article in the description, a link in the description for this article and the next one. So the sales are expected to drop dramatically. Home builders are going to have to drop the price of new homes. When new home prices drop, the regular housing, well, I don't want to say the regular housing market drops, but people selling their houses will have to sell at a lower price too, because if the new homes are dropping, your house is going to drop as well, and house values will drop considerably very soon. It's going to be like going off a cliff. It's like when you see, that big bearish divergence, that really slow rising wedge of a price action on a chart. when you see something like that and you just know the price is going to fall off a cliff. That's what's happening in the housing market right now. So assets got hit first, risk assets got hit the hardest, tech sectors got hit the hardest. Now the housing market's going to be next. And then that's the last piece of news for crypto is that there's an exchange or a crypto CEO that's warning that exchanges, there are companies that are just basically too far gone. There are already secretly insolvent exchanges that are already underwater, they're bankrupt. And this comes from the founder of FTX saying that he's already handing out money. He's trying to help keep other exchanges going. So again, I'll link this as well. I'll link this article, but things aren't looking good. And these are all reasons why I don't see the market flipping. I don't think we've hit bottom. I don't think we're going to get a big rally. I mean, we could get a rally. We could get a small rally here and there. It's going to happen. Even in bear markets, you have bear market rallies. But I think there's a lot more pain to be had in the crypto market. Another thing that I want to warn about is Bitcoin dominance. When Bitcoin fell most recently, alts didn't fall too hard. I mean, alts did fall with Bitcoin, obviously, but the Bitcoin dominance fell with the price of Bitcoin falling, and alts didn't hit that kind of lower low the way Bitcoin did. Bitcoin dominance has made a hidden bullish divergence. It's retraced back to about the 786 because it was kind of in an uptrend. It was kind of sideways, starting to trend upward. Usually when there's a bear market, the Bitcoin dominance starts to rise. So it was expected that Bitcoin dominance was going to rise, or should rise again. And if it breaks to the upside, you get back up to 46, 47, 48%. If Bitcoin dominance gets even anywhere near 50%, alts will be bloody. Alts will be hurting. There is absolutely no reason to start DCing into alts yet. There is no reason to start buying alts. And the last thing I want to show you for altcoins is just going to show you how hard they can still get hit. So we're going to take a look at ADA on a long-term draw. We're on a weekly, and we see this high at 306, and we are currently sitting down 84% at 46 cents. If it goes down to 90%, so 6% more down on the overall, let's call it 5% more. Let's say it's 85% right now. To get to 90%, we'll be down to 30 cents. So from 46 down to 30, it's essentially a 33% drop to get down to 90. If it gets down to 95% down, you're looking at a 15 cent ADA. That's what you have to be aware of with alts right now. Alts could be 90% down, and they still will get cut in half. Ravencoin can definitely, I hate to say it right now, but Ravencoin right now is 92% down, and it has been just about 94% down at 1.7 cents. If it gets down to 97%, so that's only 3% more in the overall. If it gets down to 97%, that's a sub 1 cent Ravencoin. That's a 0.89 cent Ravencoin. So guys, please be aware that alts, you can DCA in if you want. If you're going a long term, if you're looking 5 years out, 7 years out, 10 years, whatever your goal is, if you're looking for long term, go ahead, sure, do your thing, buy in however often you want. But my thought process right now, what I am doing is I'm going to only be buying Bitcoin. I'm shorting the market, I'm taking short trades, and I'm stacking Bitcoin because it's going to be the lowest risk until the accumulation phase starts, where you start to see a complete sideways run for months. I've made mention this on many videos that accumulation phases typically last 90 to 180 days. The biggest one I think in 2015 was like a 270-day accumulation phase. I could be wrong on which time it happened, but it was almost a full year of accumulation within like a 20% range. That's when you stack alts. Right now, stacking alts is not the play yet. So with that being said, guys, that's the video for today. I hope you enjoyed. Hope you got something from it. Again, I'll link all the articles in the description. And as always, until next time, peace.